Last week, I pointed out that the markets were facing a critical week because they were going to be forced to reveal their true natures. And that is indeed exactly what happened. So in this week's market update, we're going to be taking a look at what the implications are of what happened last week. Here is the S&P 500. I'm working with SPX data, and this purple line is the 20-day FLD. The FLD, if you don't know by now, is the future line of demarcation. It is a cycle tool that Hurst defined over 50 years ago, and it is a very powerful tool. When Hurst originally defined it in the 1970s, he pointed out a few of the features of this tool. But in trading the FLD myself, I discovered a very interesting feature of the FLD, which is that price tends to interact with the FLD in a very regular manner. And we label those interactions A through H, which is something that I speak about often in these market update videos. The important thing that happened last week is that price in the S&P 500, and we'll be taking a look at the NASDAQ in a moment as well, price crossed down below the 20-day FLD. What does that mean? Well, an interaction between price and the FLD provides us with very useful information because of that regular sequence of interactions that takes place between price and the FLD. In this particular analysis, we have the 40-week cycle trough over here in the middle of August. This is an analysis that we've been looking at and considering for some time. And in the sequence of our interactions, which I have described in previous market update videos, so I'm going to go through it very quickly, we had first our A category interaction where price crossed above the FLD over there. At about the time of the 20-day cycle trough, we would expect the FLD to provide support, which it kind of did for about 2 days. That would be labeled a B and then C category interaction, or a BC pair. Price then dropped down by default through the FLD, as you can see over this weekend over here in early September. It came back up to the FLD and actually found resistance, which was an indication of a failure, which is something that I discussed in last week's market update, I believe. Price then tried to get back above the FLD, failed, and dropped down again. That would have been labeled our D category interaction as price came down into the 40-day cycle trough. Price then crossed above the FLD over here. This was our E category interaction. It achieved its target, I believe, and then turned back down again. Last week's price crossed down below the FLD is then labeled an F category interaction. This gives us a good short trading opportunity as price moves down into the 80-day cycle trough. The fact that price did not find support at the level of that FLD last week was a very important piece of information for us, because it confirmed that the markets have turned bearish and that they are moving down into a lower 80-day cycle trough, which you can see we are expecting over here probably in about the second week of November. Price must now form a 20-day cycle trough. There is the nest of lows for that 20-day cycle trough, which was expected pretty much at the end of last week or over the weekend or into the first couple of days of this week. And so that 20-day cycle trough is likely to give us a little bit of a bounce. But the fact is, these markets have shown that they are bearish. Before I remove the markings that indicate the interactions between price and this FLD, I would like to point out that, of course, these interactions are measured on the basis of median price. So let's quickly display that median price. If you are tracking these FLD interactions yourself, and I hope you are, then you must remember to watch median price, because median price is what provides us with the actual generation of the target when we have a price cross. And the price cross between the FLD and price last week, as you can see, was at this level over here, just below 4,300. which generates a target to the downside measured from the previous peak over here, which was at just about 4,400, and projects down to just below 4,200. However, an F category interaction is an interaction that often exceeds its target, so we need to be on the lookout for that. Of course, there will be an inevitable support level because of this trough over here, which is going to be providing us with some support at about the level of 4,200. But now you will know, if you've been following these market update videos, that there is another possibility in the S&P 500, which places the 40-week cycle trough earlier over here in early July. That meant that this trough over here that formed in the beginning of October was an 80-day cycle trough, as you can see from that stack of diamonds over there. That meant that this price cross over here, instead of being an E category interaction, was an A category interaction. In other words, the first interaction that occurs between price and the FLD following a trough of 80-day magnitude. Now here is the important point. I presented this possibility in last week's market update video and pointed out that when the 20-day cycle trough forms, and again the 20-day cycle trough is due about now, we would expect price to find support at the level of the 20-day FLD. What happened on Thursday of last week is that price fairly substantially failed to find support at the level of that FLD. That means that the other analysis is probably the more accurate analysis at the moment. It doesn't entirely eliminate this analysis because the interaction between price and the FLD is not an absolute science. It is an indication of what we expect to happen. And so the chances that this analysis are the correct one are definitely reduced by virtue of the fact that price failed to find support when it would have been expected to, according to this analysis. However, this analysis is still possible. If this analysis is correct, however, it is a particularly bearish view because of the fact that an 80-day cycle trough formed over here. If all that we have seen following that 80-day cycle trough is this small push upwards and already prices coming down to about the level at which that 80-day cycle trough formed, that is a particularly bearish situation. The interesting thing when comparing these two analyses is that as we track price movement moving forward, we are expecting the same magnitude cycle trough to form about now, as you can see, a 20-day cycle trough. And in the second week of November, we are also expecting the next cycle trough to form. In this analysis, it would only be a cycle trough of 40-day magnitude. Notice, however, this 20-week cycle circle, which is hovering above that level. This provides us with the expectation of a high probability time for a trough to form. And so as we track this developing price action, we are going to be focused on these dates and watching as price forms troughs at about those times. Now let's take a step back and consider the broader implications of what has just been revealed by this market. As you can see, we have an 18-month cycle trough in October. I have mentioned in previous market update videos that there is the possibility that that is indeed a 54-month cycle trough. But in this analysis, and we're looking here at the first analysis possibility that we discussed today with the 40-week cycle trough over here in the middle of August. In this analysis, as you can see, it is presenting only an 18-month cycle trough over here in October of last year, and the 54-month cycle trough is still expected ahead of us. If indeed the 54-month cycle trough is still expected ahead of us, that would certainly provide some rationale for the fact that the markets have turned bearish. We've been discussing this turn to the bear in recent market update videos because of the fact that we have started to witness some bearish cycle shapes with early peaks and late troughs, and that pattern has been repeating and was repeated again last last week. So there has definitely been a turn to the bear. Displaying the composite model line tool, which takes the information from the analysis and recomposes it, if you like, to present an idea of how these cycles have been influencing price action in the past and how they are likely to continue influencing price action into the future on the basis that the wavelengths and the amplitudes will remain constant, which is a slightly questionable presumption, but it does provide us with a useful way of visualizing the analysis on the chart, particularly if you are unfamiliar with the diamond notation in terms of presenting the positions of the troughs. This composite model line presents very clearly the fact that this market has turned bearish. You can see that we had a move upwards, a bullish move upwards following the trough in October of last year, and we are now on the downward part of that cycle. That is taking us down into this next nest of lows for the 18-month cycle trough, potentially, as mentioned, a slightly higher magnitude cycle trough, but for now we will consider it as being a trough of at least 18-month magnitude. That is expected, according to this analysis, in about the middle of next year. Here is the low point in the composite model line. You can see that we have a slightly straggly nest of lows with the actual circle for the 18-month cycle over here in about May. And so towards the end of next year is where our focus is for the current bearish move. We do have rather neat nests of lows over here for the 80-day cycle trough expected in early November, and then we have a 20-week cycle trough expected perhaps in January or early February of next year, and then of course the big 18-month cycle trough expected in the middle of next year. And so that is the implication of what happened last week. The fact that the markets are still bearish was confirmed by price crossing down below that 20-day FLD, confirming therefore that we are still in the bearish mode of this cycle, looking down into an 18-month cycle trough expected next year. Now let's take a look at the NASDAQ and consider the picture there. We have only been considering this one analysis in the NASDAQ, which is the most likely analysis, in my opinion, with the 40-week cycle trough over here in the middle of August. The 40-day cycle trough occurred over here in the last few days of September, and here is our E category interaction, where price crossed up above the 20-day FLD, as it did in the S&P 500, and here is what happened last week, which is of course the F category interaction, again as price moves down into this 80-day cycle trough. We have a very neat nest of lows for the 80-day cycle trough, which is often an indication that the analysis is a good or accurate one. Not always an indication of that, I should point out. It does simply mean that these cycles have been beating with a great deal of regularity. Whether they have been correctly identified is not guaranteed, but it does seem likely that the 80-day cycle trough is going to form over here in the NASDAQ in about the first week of November. Taking a look at the longer-term picture of the NASDAQ, you can see that, of course, our 18-month cycle, this yellow semicircle, which is simply a graphic representation of that 18-month cycle, has turned down. We can use these semicircles a little bit like vectors in our chart. When the line is pointing downwards, that indicates that that cycle is influencing price to move downwards. There is, of course, a contradiction, as always occurs following a cycle trough, between the 40-week cycle impetus and the 18-month cycle impetus. The 18-month cycle is pushing down. The 40-week cycle should be pushing up. And that should have been happening since the 40-week cycle formed a trough in the middle of August. And so the fact that we have experienced a bearish cycle shape unfolding since that 40-week cycle trough in the middle of August indicates that the upwards pressure of this 40-week cycle is being overshadowed by the downwards pressure of the 18-month cycle. That provides us with some evidence that the 18-month cycle is stronger at the moment and is therefore going to continue driving price down into the next 18-month cycle trough. We have a situation in the NASDAQ where the nests of lows are very neat indeed, as we saw when we were zoomed in. Here is the next 80-day cycle trough in early November. Here is the 20-week cycle trough where the cycles are becoming a little bit separated in this nest of lows, but that is also expected in early 2024. Here is the more straggly 18-month cycle nest of lows, indicating that the 18-month cycle could be expected to form any time from February through until about the middle of the year. But why is that 18-month cycle circle so far over to the left? And then we get the 40-week circle, and then we get the 20-week circle, and the actual 80-day circle and shorter cycles are right over here in about the middle of next year. Why does that happen? It's because these circles are positioned on the basis of measuring the past 6 iterations of the cycle in question. Measuring back 6 waves or 6 iterations of the 18-month cycle takes us back a long period of time. And the underlying trend, or the combination of all longer cycles, 6 waves back for the 18-month cycle, were causing that cycle to either compress or to expand. In this particular case, we can see that there has been a shift from shorter cycles at the 18-month, 40-week and 20-week level to longer cycles at the 80-day and shorter level. What does that indicate? It indicates that there has been a change of mood. Now, when cycles form later troughs, that generally means that the underlying trend, the combination of all longer cycles, is bearish. And so the fact that the 80-day cycle and shorter have been coming in later, as you can see by the fact that their next circles and whiskers are later on the chart than the longer cycles, that indicates that there has been a turn towards a bearish cycle pressure. That is really useful information. It confirms the fact that these markets have turned bearish. And so, again, we are looking at price moving down into an 18-month cycle trough in the NASDAQ, expected sometime next year, perhaps towards the middle of the year. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server.